GM, welcome to the weekly crypto recap by Unstoppable Domains. My name is Josh Gordon, I'm your host. And let's talk about what happened in Web3 this week. As always, it's a wild week. Today was filled with maybe, or not even today, this week was filled with more negative news than we have been used to in the last months during the bull market. It's definitely getting scary out there, so let's stay informed, let's stay educated so we can make smart decisions, whether you're a collector, an investor, or just trying to keep track of what's going on in crypto. All right, let's dive in. With story number one, I want to talk about something that's super positive, but it's not always the sexy thing to talk about, and that's stablecoins. So this week we saw Circle. This is the company that's behind USDC, US dollar coin. I think it's USDC stands for, US dollar coin. There we go. And USDC is a stable coin that's pegged to the US dollar, and it's fully backed by dollars in the bank. That means it's fully collateralized. So with some of these stablecoin issues we've seen in the market recently, they've lost their peg, which means one stablecoin does not equal $1. And sometimes that can happen when a stablecoin is algorithmic or it doesn't have the supply fully backed by dollars in the bank. But USDC does, and that's what makes them really special, and it's what makes customers who use this coin feel really safe when they use it. I personally, that's my stable coin of choice because I know that my stable coins are backed by dollars in their reserve. Now, they made a big announcement this week, and they announced the Euro coin. And the Euro coin is literally the same exact thing as USDC, but instead of dollars that it's backed by euros in the bank. So they say Euro coin is issued by Circle under the same full reserve model as USD coin. Something that makes Euro coin special is it's designed for stability. Euro coin is 100% backed by euros held in euro-denominated banking accounts. So it's always redeemable 1-for-1 for euros. I mean, that's huge. If you start thinking about using crypto for payments, we're not gonna be spending Bitcoin when we go to Starbucks. We're not gonna be spending ETH. These are assets that appreciate in value, and when a business accepts them, they don't want to accept an asset that's volatile. They don't want to accept an asset if they're selling something for $10, they don't want $10 in ETH today, because $10 in ETH today may not be worth $10 tomorrow. It may be worth more, but it also may be worth less. So that's why we use stable coins, because they're fast, they're on the blockchain, and we know they're worth 1-for-1. Now, this is good for businesses because businesses can accept Eurocoin payments to expand their customer base. They can get faster cash flow and make payments globally to suppliers, vendors, and employees with funds that settle in minutes. And this is good for individuals. They can pay for goods at participating merchants, transfer money quickly across borders to friends and family, and use Eurocoin throughout the Web3 ecosystem. So I love to see this. It's officially launching on June 30th with support from basically all the major ecosystem leaders, including Binance US, Bitstamp, FTX. It's being implemented into DeFi protocols like Compound, Curve, and Uniswap. And we're even seeing it in custodians like Anchorage Digital and Fireblocks. So overall, and I gotta talk about the wallets too, it'll be able to be used in MetaMask, Ledger. So basically it's gonna be rolled out everywhere all at once. And I just think this is a good thing for the ecosystem. Stable coins backed by reserves in the bank are a good thing for crypto. Story number two doesn't take such a positive note. We're gonna talk about Three Arrows Capital. Now, this is a Dubai-based crypto fund. Three Arrows Capital, they're widely referred to as 3AC, and they're facing possible insolvency after incurring almost $400 million in liquidations this week. Now, they had tokens listed as investments. Tokens that are listed as investments on their website right now are ETH, Solana, and Luna. Now, prices for those tokens are down 77%, 90%, and 99.7% respectively since their lifetime highs. So 3AC has made a lot of amazing investments over the years. It's how they've become such a prominent and one of the major investment funds in the space, but they're seeing some major losses right now, and it looks like they might have done some risky stuff along the way, and that puts their positions into jeopardy. So there's a great thread that we're linking here. It might be right here on the screen, and it's definitely linked below in the description. Give it a read. And one thing that they, like basically some takeaways from this is 3AC lost a ton of cash in Terra Luna. They're getting margin called and liquidated, and this could be a rippling effect on the industry at large. It doesn't matter if you're up 100% on some of your investments if you don't practice solid risk management, and it looks like they might not have practiced as much risk management as they should have. And so why this is important is because 3AC might start dumping some of their positions they hold in tokens that they didn't plan on selling, but they need to sell now to get liquid enough to pay back the loans or their margin calls that are getting called because the prices drop so fast and so suddenly. Now, if they start dumping their positions, that's a lot of supply pressure on the market, could suppress prices down even further. So there's a lot of unknowns here, but really what we're starting to see right now is that there's rumors about them being liquidated against an almost $300 million ETH position. And some insiders have even said that they're getting ghosted by the founders of 3AC when they're trying to get back some of their funds that they're owed. So that's just not a positive thing to see overall. I hope it's not true, but it looks like all the signs are pointing to negative news for 3AC, which could mean negative news for the market as a whole. All right, with story number 3, I'm kind of going to break this one down into 2 parts, 2 quick hits that are both negative, unfortunately. The first one has to do with Celsius Network. Now, this is an interest earning yield platform, and this week they sent an email out to all their users and they said that they are freezing withdrawals after a myriad of failed decentralized finance strategies took place. Now, it looks like they were in the same way as 3AC. They were practicing some risky crypto practices, maybe they were over leveraged, and it looks like they aren't able to pay back all the debts that they owe right now. Now, we don't know if this means 2 things. 1, they could be insolvent. They may not have enough funds to actually pay back their debts. Or 2, their funds might be locked up in certain staking mechanisms, which just means they can't withdraw all the money that they need right now, but they have it in the bank that's locked up for a certain time period. So overall though, it's just not good to see any sort of crypto platform that freezes users' funds and doesn't give withdrawals when people expect them to be able to get that. So this was a very negative thing to see this year, and we'll see how this plays out. The 3.5 story has to do with Coinbase. I did talk about Coinbase ramping up their hiring after they made a big announcement about hiring, they wanted to hire 2,000 people this year, but Brian Armstrong just made an announcement this week saying they're laying off about 1,100 employees. And he said that the company is reducing its workforce by 18%. Went on to say that it appears that we're entering a recession after a 10-year economic boom. And on top of that said, it looks like we'll be heading into another crypto winter. So if Brian Armstrong is saying that, it means their board of directors have met. His top advisors are fearful of a recession and a long crypto winter, and they're making some adjustments. So they did say that it looks like they grew too quickly as a company. In 2021, they were 1,250 employees strong. They grew to almost 5,000. They're cutting that back down, so that's a very rapid growth in a short amount of time. And they just had troubles scaling their efficiency as their headcount grew. So I'm kind of curious to see how this plays out across hiring and crypto as a whole. But when you see the top crypto exchange fearful of a recession, to me, as an average Joe trader, that makes me fearful of a recession too. All right, let's talk about unstoppable domains. We've got some big news. We're all heading to NFT.NYC next week, and so if you're there, let's catch up. There's a couple different ways. Now, if you're part of the UD fam and you're attending at NFT.NYC, come visit us at booth 79 inside the Marriott Marquis Times Square Hotel, and you can chat with us and even get some free domain credits. Now, there's other ways to meet with us too. On June 20th, there's a Woman of Web3 mixer where you can hear from various women speakers and a star-studded female leadership panel. And there'll be information about that on our Twitter page. On June 22nd, you can hear our very own Sandy Carter, SVP and Channel Chief, present at the Edison Ballroom on digital identity and NFT ownership. Sandy always crushes these talks, so super stoked for that. I'll be in attendance for that one. And on June 23rd, we're having a huge party like it's 1999. We're partnered up with some awesome partners, 90s Babes and Polygon, to throw a massive party, and it should be a lot of fun. So if you're interested in that, shoot us a message and follow along on Twitter. You might be able to snag a ticket because it is sold out right now. The second piece of unstoppable news is we have another blog post out. I've highlighted these blog posts a couple times on our weekly series because they're so educational. Shout out to the crew that's writing those. Now, in Web 2, ownership is a myth. You don't own your digital assets. Instead, you rent them from the platform that you are using. So fortunately, Web 3 changes this. Your digital assets won't be at the whims of the platforms you use, and you'll be able to prove ownership and transfer that ownership in Web 3 just like you do the real world. So if you want to learn more about ownership, owning your data and your assets across platforms, check out this blog. Everything you need to know about digital asset ownership in Web 3. I love this blog series, and I'm going to be making sure I read the future blogs coming out in this series too. Now, I want to give a shout out to our community member of the week, someone I connected with on our UDFam Spotlight series that's happening every single Thursday on Twitter. Now, I'm giving a shout out to Daniel King, aka Medi. He's an NFT artist, and he joined us this week to share the work he's doing around NFTs, generative art, AI, and code, doing some super cool stuff. And personally, I find it fascinating when people are mixing code and art, and he shared a lot of that with us this week. So check out his Twitter page, support him in the UD fam, and Daniel, thanks for joining the Twitter space, and keep on rocking that unstoppable domain NFT, and good luck with your artwork. For an NFT project of the week, it's not exactly an NFT project, and it is someone we mentioned earlier, but I want to give a second shout out to Circle because, like I said, stablecoins don't get enough recognition because they're not sexy. It's like not art. You can't buy a stablecoin and expect to make money, although in the case of Terra, it looks like you can buy a stablecoin and lose money. But for a stablecoin to come out and say they have 100% of their tokens backed by reserves in the bank, and to have open audit trails to prove this is huge for the industry. Some companies follow practices once regulation is put in place, and some companies set the standard for what regulation really should be. And I think Circle's doing that. So I want to give a shout out to them. Shout out to USDC. Shout out to that Euro coin. All right. Thank you for listening to this week's Crypto Weekly Recap. If you found it helpful, please drop a subscribe on our YouTube channel, drop a like on the video. If you want to connect on Twitter, I'm at JustWavyJ. Always happy to talk crypto. Slide into my DMs, hit me with that let's have a chat. And I also want to plug the Unstoppable podcast. Comes out every single Wednesday on Spotify, on iTunes, on Apple Podcasts, wherever you listen to your podcasts, the Unstoppable Pod is playing. So throw a follow on there too if you want to learn more about crypto, NFTs, and hear from some cool founders in Web3. All right, with that, I will catch you next week from New York City, live from NFT.NYC. I'm stoked about it. Thanks for tuning in. Peace out.